Can you hear me now? Can you hear me now? I hope you can hear me now. Just say yes. Oh, okay. Max has said yes. Okay, I'm going to restart again what I was talking about. I'm thinking that when we look at all these negatives in the futures and we contrast it to what happened yesterday when things started going up, this clearly indicates that there is a change in the opinion in the market. But again, we cannot trust pre-markets very much because the volumes are very thin and the price fluctuations can be very heavy. But in my experience, when I've seen these kinds of heavy negative numbers in the pre-market futures, the market has definitely opened negative. What may happen within an hour or so of opening is up to question. But at this point of time, we are looking at a possibly negative opening. Now, I will explain why this is happening when we go into the technicals, the way I understand it as a retail investor. But right now, I want to communicate a few points. I think there is something which is operating in the market, which I call as the uncertainty premium. The uncertainty premium is like a tax on the market or an anchor weighing down the market. The uncertainty is because we don't know whether tariffs are on or off. They get postponed. We don't know whether tariffs are on everything or on something specific. And also this reciprocal tariff thing. And all of these things, if you look at it from the point of view of a small business or any kind of business, are not so easy like somebody says you do this and you do it. Because there is accounting systems involved, there is taxation systems involved. You have to calibrate all of those things. You have to set it up. For example, in Canada, we got a 2-month or a 3-month HST holiday. It was more of a pain for small businesses because they have to reconfigure their software. In some cases, they had to make changes to the software to make sure that taxes were not charged. And then downstream, it goes all the way into accounting. So it's not that easy. So many of the companies are also up to their wits' end. And then you have these layoffs from Doge. Now, I think that's going to reflect in the next earnings report. And right now on Friday, when we are looking at the earnings report, I think on Friday, we have the non-farm payrolls and unemployment rate coming in. This is going to be in the backdrop of the 75,000 jobs reported by ADP. Now, that's a significant drop, almost 50% drop from what was anticipated. Will that show up in those reports and will we get a double whammy out there? I don't know. Friday is just around the corner. And it's not only the layoffs that has happened through Doge, but it's going to have a domino effect because all these departments which have got their employees slashed and so on and so forth, they are giving orders to private sector, and those private sector companies are going to let off their people and some may shutter their business, and therefore it's going to just percolate and that will reflect into consumer confidence. So once this virtuous downward spiral gets started, it's very difficult to put a stop to it. So I'm worried that we are getting into the tipping point out there, and maybe participants in the market are now starting to sense that. And that's why we see this seesaw, a little bit of hope. Maybe tariffs are going to be postponed, tariffs will be reduced and carve-outs will be happening. And then the fear that, oh, these tariffs are going to destroy everything. So we're getting this whiplash up, down and everywhere. So that's what we have in our thumbnail this morning. So having said that, I think that there are two tech results which have also contributed to a lot of bearishness this morning. One is Marvel Technology, which has also said that the outlook is looking a bit weak, and then MongoDB. All of these are weighing down everything. Now look at this news about Jack Daniels saying Canada pulling US alcohol off shelves is worse than tariff. Now, if Jack Daniels feels like that, imagine the other companies which are out there. It's not like the pain is one-sided. It's not that pain is just felt in the US, it's also felt in Canada. And if the Canadian purchasing power goes down, then their ability to buy high tariffed goods from US becomes much lesser, and therefore they will seek out European products or Mexican products or something else as substitute. And the business once lost is not coming back that easily. So this is not a good path that we are in, and the continent is getting a rift where it was earlier synergistic and integrated. So after having said that, I think all of you guys are also smart, intelligent, you're looking at news and everything. So I won't belabor the point. Let's go on directly to the indices. I'm looking at the index future. And what I saw here as a potential trend change has got reversed back again. This is again a trend change that we are looking at here. These are all daily candles that we see here, and this is the Nasdaq futures that I'm looking at, and the market is open and we are down 1.45%, and we have a support out at 20,038, which is the horizontal support, and then we have another support which is the 200-day exponential moving average, and the 200-day exponential is sitting at 20,290. We are comfortably above both of them, and at this point of time, I think one of the things that I would look at is all the death crosses that get formed, where a shorter term exponential moving average crosses over a longer term exponential moving average, and we are seeing plenty of evidence out here. So I'm a bit worried about that bearishness. I'm happy to see that the MACD is improving, but the momentum is dropping, and today's pre-market action takes us closer down there. And as I mentioned before in my earlier session, at around 30% on the RSI, we have a chance of a dead cat bounce, which can nicely coincide with this support level out here of 20,038. And if we have that bounce, then we are going to retest another level of resistance out here at 20,664. So that's what I'm looking at. And once that support testing happens and we come back down here, if we break down below this, then we have a huge area of support out here, which is bounded on the top by 19,748. So overall, I'm looking at Nasdaq in a bearish manner. Then look at S&P 500. S&P 500 kind of had a little bit of a jump yesterday, but then it came back down again. And then we have this 200-day exponential along with this horizontal line of support of 5,738, which is going to give us a support. And right now we are at 5,787. So if I was to look at the 200-day exponential moving average, it's at 5,743. So we are just above all of these numbers. And I think our next resistance is at 5,861. If we manage to break through that, then we are all good. But the pre-market indicates a negative bias. It's down 1.08% as we speak. And if we go on to the 10-year yields, the 10-year yields have definitely jumped up. As the yields go up, I think the money will start going into the bond market and people will try to lock in higher yields, which is risk-free. And we have the support of the 9-day exponential moving average, which is the red line, which is trying to provide some support at this point of time. And the 200-day exponential is providing resistance. What's going to happen later on during the day, I do not know. But if you look at the way the MACD is positioned and the momentum is positioned, the bias is towards a raising yield. Raising yield, and that's what is going to be another factor which is driving the market away from the stocks. So with that said, I'm going to go on and have a look at indicators. And let's look at the actual Dow Jones, where it ended. Dow Jones was looking very good when it jumped up all these three levels, and then it created 42,546 to become a support. So I'm going to mark that as a support out here. And then we also have another support here at 42,913.19, which was created yesterday. And today, pre-market, we are up 1.14%. Sorry, I'm looking at the actual Dow Jones, so I won't be able to comment on pre-market. So at this point of time, I think if you look at the other two indices that we saw where we had the futures, I'm thinking that the bias is going to be downwards. And yesterday's candle, if I'm trying to see some clues out here, is also giving me mixed outlook, because MACD was improving, momentum was also improving. And our green candle, however, was not able to break through the previous day's open. And therefore, I am thinking that the bullishness, even though it tried its best, could not cancel out what happened the previous day. So the overall bearishness still persists. However, if you look at the Japanese candlestick pattern, this kind of closely resembles a bullish harami. So there is a positive bias. So I'm totally confused with Dow Jones. So I'm not going to think of anything about it. I'm just going to go ahead and see if I can make clues anywhere else. I got S&P 500, where the MACD was improving, momentum was picking up, and we had gained 1.12%. And we have resistance at 5,841.29, which we cleared yesterday. The question is, are we going to be able to be above that? We saw that S&P 500 was negative this morning, which means that the testing of this resistance has failed. And now we have to test the support out here. The support is at 5,779.03. Sorry, I was distracted by Inf's text message. So there is a possibility that we could have a dead cat bounce. Yes, that's also there, because whenever we go to the 30% and the oversold area, there is always the prospect of a dead cat bounce. But at this point of time, I think that based on the previous day's action, where all institutions sold a whole lot of stocks at the end of the day, and I think a lot of retail investors must be panicking at this point of time. At least I'm getting worried. Retail investors do not have that much of appetite for risk. So overall, all those things put together, the bias for bearishness is much stronger, in my opinion, than the bias for bullishness. So if anything happens, that could be a dead cat bounce, but swiftly it can go down again. And as far as Japanese yen unwind is concerned, even though Japanese yields have picked up, I do not think yen unwind is going to happen. That is because we got the dollar index, which shows that the dollar is weakening. So that kind of balances it off to a certain extent, in my opinion. So I don't think we have a yen unwind trade, carry trade happening anytime soon. So with that said, let's go on and look at Russell Index, which was down 1.20% in yesterday's trade. And the market is open in this morning. It's down 1.20%. It was up 0.99% yesterday. And there seems to be a negative bias out here. We bounced off the supports that we had. I think I have got two supports here. I'm going to remove one of them. 26.65 is going to go away. The other support I have out here is the one I think I'll stick with, because it must have hit the bottom somewhere in the past. So let's go further. Yes, so we have situations where it has gone even below that. So I'm going to stick with 24.35 as the kind of level that I'm looking at. And let me go to NASDAQ. NASDAQ was up 1.36%. This morning we saw we are already down. So let me recalibrate this chart a little bit so that we can see properly. TradingView does not calibrate very nicely. We have to go to another stock and then come back again. Yeah, we are back in business. So we have this resistance out here, which is at 20,923, along with this blue line of blue exponential moving average, which happens to be the 100-day exponential moving average and the 9-day exponential moving average. They're all weighing down on the stock price, and you can see a bunch of death crosses already formed out here, which is bearish in nature. MACD is also bearish. However, we saw yesterday a little bit of attempt to amend itself, but this morning pre-market action shows that we have gone in the reverse. So if our support holds for 20352, then I would say that we'll bounce off this, go here and try to test this. It could even happen intraday. We may open a bit lower and then we may try to inch towards this, but our first resistance is going to be 9-day exponential, and then we are going to be able to hit this resistance at 20,923. And after that, if we come down and then we start testing this support, and if this gives up, then we have 19,700. So I'm predisposed to be bearish this morning, and whatever I see is making me feel that it's bearish. And also put call ratio is very put call ratio is looking bullish out here. It's 0.75. What do you know? So that confuses me even further, but I'm going to maintain my bearish bias this morning. And we have VIX, which is up 7.53% already. Higher VIX always indicates that the market is going to be volatile, and it may go either way, but most of the times it goes down. And if you look at QQQ, market is already open. QQQ is down 1.37%. So we are coming closer to all those resistances. We have this gap fill out here, which I thought we already filled, because let me draw this line out here. We did a bit of a pierce out here and went off, and then we came back again the next day and we bounced off here. The question is, are we going to be able to use this support and bounce back up again today, or are we going to break down from here? If we do break down from here, then we have the 200-day exponential to contend with. So I am thinking that what could happen today is we may end at around 491.32 after having pierced the 200-day exponential moving average and bounced back. That's what is most probably likely to happen. When we do fall, it's not going to be a very sharp fall immediately in a single day. It's going to be up and down and everywhere because the volatility is high. And then I'm going to look at gold. Gold is definitely looking a little bit better, but this morning it's down 0.55%, getting support from the 21-day exponential moving average, has fallen below the 9-day exponential. But structurally, I'm thinking that with all the geopolitical situations that we are looking at, I think gold is likely to come back down here. At the most, it may bounce off 2792, and it's on its way back to challenge the resistance at 2954.67, and the MACD is very bearish right now at this point of time, but the momentum is still above average. So I'm thinking as the day goes by, it's going to kind of move sideways. One of the problems for gold is that if bond yields go up, bond yields make bonds more attractive as compared to gold, because gold does not give you any yield. All you have is the capital gain. And again, the capital gain is basically the depreciation of the dollar. So at this point of time, I think the bond is pulling a lot of money. But when the bond yields start falling, that's when gold will recoup everything. So I think all of that sets it up for more or less coming closer towards this support and then bouncing back. So with that said, I think I'd like to go and have a look at some of the stocks that we are generally watching, and I'll also take some ticker requests from you, and I'm going to expand this chart a little bit so that we can see it much better. We are first looking at NVIDIA. There's a huge zone out here, which is going to be a buying zone, and there is a lot of people who are ready to buy out here at 109.47. We are very far away from that. We also have this diagonal line of resistance out here, and this diagonal line of resistance is going to prevent us from going above. And today in the pre-market session, we are down here. So I'm going to just pull this diagonal line of resistance a little bit more so that we form some kind of a wedge out here, and we need to break through this wedge. That's what we have to do in order to go upwards. And because we are on a bull channel out here, I would think that we are predisposed to break out on the upside, but it's not always a given. We have broken out on the upside many times on previous wedges, and we have kept on coming down. And now we are in a situation where we have stopped making higher lows, in my opinion, and we are making more of lower lows. And earlier, I would have said that if I draw a line from here, we got higher lows happening, and that is clearly gone, and it has been demonstrated that we are in a bear channel. So I'm looking forward to bounce from here and create a new bull channel, which means new higher lows and higher highs. Is that going to happen in this market backdrop, especially with the tariff talks and other things? I'm not sure. And yesterday after my live stream, I was watching another YouTube video. It was more of a political video where some commentator was saying that last time during Trump's presidency, we had Foxconn, which said that they are going to open a big plant somewhere in Idaho or some other place like that. And nothing came up after that. It was just gone. And then another refrigeration company had said that they would continue manufacturing in US and not move the plant anywhere, but they laid off a lot of workers and eventually moved the plants to Mexico. So the commentator was basically saying that this is all show and tell, that TSMC may probably dig up a foundation, but don't think about the factory coming anytime soon. He also pointed to Biden pouring a lot of money into Intel, and Intel is now saying that their plans will come up only after a decade. So he's saying that things don't match up. What is seen is more of a photo op, so don't go by that. So let's say if this commentator is right, then NVIDIA, again, all the positives that I said yesterday, we have to put this as a risk factor. If it's a risk factor that TSMC just paid lip service but did not actually intend to create the factory, then that's something negative that we have to look at. So we should keep that in mind. So what's going to happen to NVIDIA? I think NVIDIA starts to look even more and more attractive if it falls down, and if it manages to break through this heavy area of support, which I doubt it will. I'm definitely going to buy and start dollar cost averaging NVIDIA. Next, we are looking at AMD. Now, AMD, I think I would really love to short it. I had shorts, I sold it off because I panicked when we had this green candle coming up here. But at this point of time, the MACD is improving and the momentum had picked up, but the pre-market trade, if it goes through, suggests to me that we are going to come back down again. So how much low can we go? I'm tempted, but I'm not going to get into AMD because I think if the markets start falling, AMD is already heavily beaten up, so it would not fall much more. In fact, this will be one of the stronger stocks because it's already beaten up. So I wouldn't go for shorts out here. Next, let's look at Intel. It's dropping like 9 pins. It's going down another 1.59% in pre-market trade. And SMCI, I'm really surprised that SMCI has not picked up. It's dropped another 4.88%. And MACD momentum, everything is looking very bad at this point of time. I think more downside is in order. And then we go to Meta. And in Meta, I can see that we are down 1.21% in pre-market trade. MACD is not looking great, but momentum is looking pretty good. We have an excellent support out here at 636.70. I think that's going to hold us today. And we are just at the support level out here of the bull channel that we re-entered before. Are we going to stay above that? I think not. I think we may come down, bounce off this, and then test this support again. Because basically Meta is a strong stock, but it's richly valued and its PE is becoming more attractive as it falls. Next, let's look at Microsoft. Microsoft is looking amazing out here. It has completed a huge jump and converted another resistance at 399.89 into a support. And those people who were very happy yesterday as it was going up and did not sell, I bet they are second guessing their own foolishness or optimism or whatever you may call it, because this morning we are down 1.53%. We are at 394.87. It's a drop of $6.15. That must hurt. And we are looking at MACD, which was trying to improve, and momentum that was picking up but was still below average. Maybe it's turning around and coming back down again. And Microsoft PE is also looking good. Apple is down 0.66% and it's below this diagonal line of support and resistance. Let me change this into red because this becomes resistance. And I think that at this point of time, we are still below this diagonal line of resistance, which we were above yesterday. I marked this red. And are we going to break through above this? It depends on the entire market environment. Right now, MACD is looking very bad. Momentum is also down below average and pre-market action doesn't look that good. So I think we're going to struggle here. Maybe we form a small doji candle with a wick above and a wick below and a very small body straddling this diagonal line of resistance. And we'll get support out here from 227.22. I can see hot dogs feedback out here. I think for semiconductor perspective, it should be noted Chinese chip stocks are up 200% in the last 3 months for food for thought. Yes, I think the Chinese have an advantage because the government is in an easing mode and funding is easily available. And from my experience, as I was in India for a long time before I migrated, I was in India until my mid 30s or early 30s. And then I migrated, and I remember India was under a lot of sanctions and we developed a lot of indigenous technology, and it kind of gave us an industrial base and everything. So China is like a turbo. And if you put a lot of restrictions on them with semiconductor by blocking technologies going in, they have already learned world-class manufacturing technology. They have got a trained workforce, experienced workforce. They got businessmen with international experience, and they're also very good at cost control. And the Chinese government can make anything happen because they control all the sectors. So given all of those things, absolutely, if US is not careful, it wouldn't be difficult for China to take the lead because they got smart guys who have been educated in US institutes and other things, US universities, and who would go back in a heartbeat to develop the nation. So I think, Hot Dog, you got a point there. That's what I'm worried about. Trump is squandering a lot of soft power that US has, and overall structure that US had created, which gave it soft power in the sense that US just had to talk behind closed doors or pick up the phone and talk to a country, and the country would do what US wanted. But now all of that has changed. I was looking on threads the other day. People in Australia, people in New Zealand, people in UK, all of them are saying they're going to boycott US products and stuff like that, simpatico with Canada and Mexico. So this is not going down very well, and yeah, let us see. Let me not get into that rant. Time is running out. Max Sarama is saying, please look at FXI, Baba, JD. Yes, Max, I'll do that. Let me quickly go to Tesla. Oh, sorry, Amazon. Amazon again saw a lot of institutional buying, I believe, and it had two really good jumps. And I think that Amazon is very strong, and I would like to buy some more Amazon in my portfolio right now. Right now, I don't have any Amazon. I sold off all my profitable Mag 5 positions and took profits. And I tried to enter back into Google. I couldn't, but I got into NVIDIA and I got into Microsoft. So I have those two things with me. But I think Amazon, I would like to buy today. Amazon is down 1.82%. It's got a very weak MACD, and momentum is also weak, and pre-market indicates that we're going to get red bars out here on the MACD, and probably we are going to go back down to the 30%. We are bouncing off the 30%, so I'm going to disregard this green line on the RSI for now, and I would assume that we are going to bounce off the 30%. If that happens, then we are going to bounce off the 200-day exponential. So if I'm going to buy Amazon, I'm going to watch it come closer to the 200-day exponential, and then I'll do DCA. That's my plan for the day. That said, let's go and have a look at Tesla. Now Tesla is, let us say, what is it looking like? Tesla has bounced off this support out here at 268.87. In the pre-market trades, it's down 2.79%. MACD is bearish, but mending. Momentum was below average, and it's picking up a little bit, but it's still below the 30%. In the past, we have gone all the way down to 16.65 on the RSI scale. So there is plenty of rope for Tesla to go down. I think fundamentals of Tesla are weak, and technicals of Tesla are also weak. So I'm expecting that we at the most might bounce off this resistance at 284.42 if we get any bullish strength in the market today. And then we are going to test this resistance at 268.87, break through it, and then come and test the support at 262.62. And this is where I think we will be able to land today. I don't think Tesla is going to fall very rapidly. It will fall in drips and drabs because there are a lot of people who are buying up. Even Cathy Woods is still positive about Tesla. So despite a lot of bad will around the place, I think it has got support at really good, powerful locations, which can prop up Tesla for the time being. So that's what I'm thinking out here. Let's look at Google. It's a wonderful stock. The PE is very low. I'm going to nibble a little bit more on Google today. It was down minus 0.99% in pre-market trade, and it is in this area. Let me mark these back again. I think I forgot to mark this after it became a resistance. Let me mark this green. Let me mark this green again. This goes green, and this becomes green. So we are within this area of support. You see this thin orange line out here, 173.23. This is where we are in the pre-market session, and I'm thinking that we are going to break down from this support of 172.75, and then we are going to test the support here at 169.10. I think that's what is happening out here as far as Google is concerned, and it's below the 200-day exponential, and it's also below the 9-day exponential, both of which are converging along with the support at 172.75, along with support at 175.44. And that means that breaking this is going to be very difficult today. It's going to be a very strong resistance for Google. And I'll change the colors of this later on after the live stream. I want to go on to look at Broadcom, which is again another big stock out here. And we have earnings coming up today after hours. We'll have to see what the earnings do for Broadcom. And right now, it's looking very bearish. It's down 4.69%. I'm tempted to buy a little bit of Broadcom because we have filled the gap that we have out here, and the gap fill has already taken place, or has it? Let me draw a line from here. yes, the gap fill has taken place perfectly. So there is no reason for this gap to pull it down as a magnet. So if we have good earnings and good outlook, there's a good chance for AVGO to bounce back up again. So I would watch out for the earnings and see what I can do with that. Next, I'm looking at Palantir, which is down 3%, and it's got a support out here at 83.68. I think it's going to retest this support today. And right now, the resistance at 87.42, which is this fluorescent green line that you see, which happens to be the 50-day exponential moving average, is kind of keeping it down. If we break through below that, I think it's right on top of it, but if we break through below that, then the next support is 83.68. MACD, momentum, all of them indicate that based on the pre-market action, if it carries through, we are looking at a down day for Palantir. And then I'm going to go directly to, what else do we have here? SMR and RGTI. So Rigetti is down 11.98%, really brutal out here. Everything is looking weak overall. SMR is down 5.43% after the smart gain that we saw yesterday. I think the 200-day exponential is trying to hold it up, but overall, looking at the pre-market action and the way MACD and momentum is situated, I think that we are going to fall down further and we are going to break down below the 200-day exponential. More pain before any amount of gain that we can see. So that's all I got out here. I want to do a quick look at genomics before I go to BABA and the other new tickers that we are talking about. Let's go and have a look at genomics. Where is genomics? Let's come here to Verve Therapeutics. A very sharp reversal out here, pushed down by the 9-day and the 100-day exponential moving average. And our MACD is improving. Momentum is still below average. There are no trades pre-market. So I'm thinking that there's a very strong resistance out here. So we might at the most go up to 6.62 today, and then we are going to get pushed down. And we got Ginkgo Bioworks, which is down 2.78% in pre-market trades. And I think that we have weak MACD and weak momentum. So that could be further downward movement, and probably we have a minor resistance out here. I'm going to draw a minor support out here, because this is where we ended up in the last trading day. I will call this a minor support, and I would say that we should either hold up here or bounce back from here, maybe a wick that pierces this and goes up. So any of those things are possible for the day. Then we have Caribou Biosciences, which is down 6.98%. I thought this could have been a trend reversal, but given the overall market weakness, weak MACD and very weak momentum, I think that it's going to come down further. Again, I'll put I would say this is a temporary, or let me click this out here. This is a temporary support or a weak support out here, which it can bounce off. CRISPR Therapeutics is down 2.40%, starting to look very attractive. And we had a support out here at 44.58, which has now become a resistance for us. And then we had the next support at 42.84. Which we have broken down below because we are at 42.79. This is what has happened in the pre-market session. I'm going to leave it as it is so that we don't jinx anything. But if it goes down from there, I think it's going to get a little weak support out here at this level. It's going to get some kind of a support. And this level happens to be 40.79. That's where we'll get a support. So if anybody is dollar cost averaging, I would suggest that wait until here and then do the dollar cost averaging if you're planning to do that. And then looking at Grail, I think somebody in our, I think Jesse was buying, Jesse Isaacson was buying more of Grail. He's got a very low average cost on his portfolio for Grail. So Grail is looking weak at this point of time with very weak MACD, and momentum is also just on top of average. And if you look at the pre-market action, we have fallen below average. So our next support for Grail is going to be this fluorescent blue line, which happens to be the 50-day exponential, which is sitting at 32.39. So that's the support I look at for today. And if we want to look at a minor support, I think I'll give this as a minor support. This could be a minor support line that Grail could bounce off. And this happens to be at 34.46. Next, let's go on to look at Prime, which is down 3.49%. It's still above this bearish channel, and it's above the support line for the bearish channel out here. Next, let's look at Beam Therapeutics, and Beam is down 1.57% in pre-market trades, and I'm still thinking that 25.10 is going to hold for it. And we have got Altimmune down 2.10%. Boy oh boy, every time I look at Altimmune, I regret making that gamble. Of course, it's a very small portion of my portfolio, but I have a bunch of small portions of my portfolios which are all in deep red, and that's starting to hurt me. So I'm feeling really shitty about this whole thing. Altimmune doesn't seem to get any reprieve out here. It's down 2.10% in pre-market trade. MACD momentum, everything is looking very, very weak, and we have no new news that can give us any catalyst at this point of time. Again, Bluebird has fallen down 4% in pre-market trades. It's gone to 3.48, and we have the support out here. Sorry, this is the RSI resistance that we had plotted earlier. So I think we have a minor support out here. I can draw a minor support. I'm going to draw it as a horizontal line because we are at all-time lows out here. So I'll put this line here, color it green, and reduce the thickness of the pixel so that you can see that I've put it just below this candle out here, and it sits at around 3.76. That's the low point for Bluebird today, in my opinion. Allogene is down 2.59%, and MACD momentum both are looking weak, and mRNA is down 4.29%, and its next support is going to be at 29.71. We got ARCG, which is down 2.42%. Its next support happens to be 22.94. It's at 23.40 right now. So I'm thinking that it could probably test this support today. And I want to skip over to Intelia. If you look at Intelia, it's down 2.30%. MACD momentum, everything looking very weak. Illumina is down 0.33%. Illumina has been singled out and blacklisted by China. No more imports of Illumina equipment into China. So the local Chinese companies will have a good time selling their equipment, but I think consumable sales will continue to happen. So to that extent, Illumina has got already those things priced in out here. There was a bit of a bounce. I think we are going to see some consolidation for Illumina, and then we'll look forward to a little bit of jump coming up from there. And the resistance is going to be this huge pocket out here starting at 89.56. IMTX has got no trade in pre-market sessions. Editas is down 5.85% in pre-market sessions, and then the chart had improved a lot, and I would like to see what happens when the market opens. If there is overall pessimism, it won't take too much of a time for this to change and for the momentum to follow below average. And then we have Vertex, which is down 0.97%. And MACD is still bullish. Momentum is pretty high. I am thinking that Vertex is just trying to make this diagonal line of support a little bit level-headed. I think it would like to come somewhere like this so that it's easier to manage. And I'm thinking that we will see more consolidation and a little bit of drop and a consolidation. It's basically a bull flag that is being created out here, and it will break out on the upside. And all of that might probably happen towards the end of March, when generally the market is likely to pick up. That's what I'm thinking is happening out there. Now, having said that, I want to look at crypto before I go to Baba and other things. So hold on, let's look at crypto. And I'm looking at BTC USD. If I look at the Bitcoin chart, MACD has improved. It's become bullish. We are down 0.53% right now in the market. Our momentum is below average and it is dropping. We have some supports which earlier were supports and then got converted into resistances. Now I'm going to mark the previous supports out here and which got reinstated. So we have supports at these levels. Let me see. The last support is out here. And this support happens to be at 89,988. And as I said before, Bitcoin is mapped on to the stock market. If the stock market falls, expect Bitcoin to fall. And I think Bitcoin will break through these supports today, test the 9-day exponential, and potentially break down below that if the stock market continues to go down. If the stock market keeps going up, then you can see Bitcoin going to its new highs. And for me, the bottom for Bitcoin is somewhere around 76,653 in the near term. That's where I'm looking that it might go to. Ethereum is also dropping at this point of time. Overall, if you look at the long-term charts, you will see that the altcoin season did not happen. We are in a bear channel. However, this morning we are having a little bit of a jump out here. MACD is trying to mend itself, but momentum is not that high. As you know from our genomic stock analysis, I always say I need the momentum to be above average to be confident about the direction of the move. Right now we are being pushed by the 9-day exponential, and I'm thinking that this jump out here for Ethereum will depend on what happens to the overall stock market. If stock market goes down and if the yields start going up on the bonds, I think both Bitcoin and Ethereum are going to give up their gains. Now I'm going on to Max's questions, and I'm going to look at some of those shares. So I'm going to create a new watch list, or maybe let me go to AI. And out here, I'm going to start off with the first one that Max had asked, FXI. FXI, what is FXI? So remember, I don't have any fundamentals for these. It's all purely technical. So let me pick up FXI and just look at purely the technicals. I don't know the fundamentals of this stock. So what do I see here? Wow, this is looking good. This is looking good. What is this company? iShares China Large Cap ETF. Wow, this is looking amazing. There is a gap up, which is what worries me. But if it wasn't for this gap up, I would be really optimistic. And we had some kind of resistance out here. I think the resistance would have been here, and we broke above it. So that is one thing I can point out here. Let us go into a monthly chart, recalibrate, come back and see what this looks like. Interesting. Let's plot this out. Pull this up here. Roughly 46.08 is the target. But on the way, it's not going to go straight up. It could take time to reach there. And geopolitical issues will definitely impact this. And then we have got this RSI on almost overbought out here. I'm just going to take the nearest point on the RSI out here and draw a line out here, put that as a resistance at 79.30. So it can still go up on the RSI. And again, this is a risky bet, but I can see it going all the way up to 46.18 based on the cup and handle pattern that I've drawn out here. But cup and handle doesn't always materialize. Now let us forget this cup and handle. Let me remove this cup and handle and let us do a different one. Let us say this is a shoulder, this is a head, and this is a shoulder. Then again, we look at a target which is definitely positive. So I'm thinking that the chances of meeting these targets are much higher. And also, if Trump keeps on doing 2 foot forward, 1 foot back with the tariff and this uncertainty persists, I think this should be doing well because people will be moving their money into other parts of the world in order to reduce the risk on their portfolio. So that's all I have for that, Max. I hope that that is something that helps you. So I'm going to take off this FXI. Then I'm going to look at the next one you said, Baba. Again, I don't have fundamentals out here. I'm just going by technicals. Baba, let's look at Baba. This is the monthly chart. Each candle is a 1 month candle. We already had the cup and handle execute out here. So let's draw that again. And see whether we have already met our target. So roughly around 175.23 is where it should go. And it has got opportunity to go further up on the RSI before it is pushed down. So I think Max is looking at really interesting stocks. I think I might also dip into some of these today if I get the opportunity, because there's always a bull market somewhere. And I think Max has got bull market in his sights. Really good work. See, this is the benefit of a retail community getting together and sharing intelligence, because I wouldn't have stumbled across these things on my own. So thanks a lot, Max. You're also asking to look at JD. Let us look at JD. JD. So JD.com. I don't know what they do, but we're going to look at it from the point of view of technical analysis. Boy, oh boy. Retail trade, internet retail. Can you tell me if this has also got Chinese background to it? Is it a Chinese company? The pattern seems to suggest it could be Chinese, because we still have a cup and handle out here. Of course, it's the same rinse and wash kind of a thing with this stock. Same like what I did for the previous ones. Okay, let me take it out here, and then we take this line from here, trend line, and pull it up from the lowest point to the neck, clone, change color, pull it out, and we are looking at 80.31. This is just amazing. So I'll have to check up on JD and see what it is, whether it's a Chinese company. The profile seems to indicate that it's a Chinese company. So we'll see later. So that's what I have there, Max. But again, these are all my personal opinions. You can't take it to the bank. Do your own analysis. And I think Hot Dog is right. It should be noted, Chinese chip companies. Yeah, not only Chinese chip, but in general, it's all doing very well. Do you guys have any other tickers that you want me to look at before I wind up the day? Are we winning? It depends on what kind of bets that we take. So I'm going to go back and do my own. All Chinese FXI is leverage ETF large cap. All Chinese FXI is ETF large cap. Okay, FXI is ETF large cap. What about JD? What about JD? Let me open this JD. JD.com. JD looks very interesting to me. In the pre-market, I might try to work on JD. It looks very good. Okay, guys, unless you have anything else you want to talk about, then okay, how about GRRR? Is that a ticker or are you playing with me? Oh, JD owns Temu. Oh, okay. So I think I won't do that as a long-term investment. I'll just do it for quick gains. I won't put it as a long-term investment. So GRR, let me see if Inf is playing with me or there is really a grrr in the market. Grrr. Grrr is a momentum ticker. Okay. Grrr. Gorilla Technology Grouping. It doesn't even have a history out here, Sandeep. It doesn't have enough history. So it's very difficult to analyze this one. Maybe it's in the process of creating a cup and handle pattern. Let's look at it in a daily chart and see if we can get any sample out here. Sample. Ah, yeah. There you go, Sandeep. You got your own cup and handle as well. So momentum trade it is. A target of 50.14. So you got around $9 left. It may or may not reach there, but it's overbought right now. And it's been overbought even more in the past, all the way up to 93.35. So I think it's worth a go. The stock price is less than JD for that matter. So that's good. Joe Williams says PDD owns Temu. Okay. What about GV? What is GV? Let us see. My. See, I'm getting the benefit of the retail investors for the first time. I'm really happy. I'm seeing a lot of new stocks. Visionary Holdings Inc. Okay. This seems very visionary. Are they really visionary? Oh my God, look at that candle out there. What the hell happened here? Top pre-market game. Visionary obtains a financing consent letter from a $1 billion international consortium. Oh. But again, I think I wouldn't touch it right now. Because with all of these jumps, there is a reversal that comes and there is a huge gap up. You see this huge gap up, it's going to act as a magnet. And I have seen stocks like this before, which went up and then they came back down. Let me try to recollect. SMCI, right? I burnt my fingers on SMCI. What lessons did I learn? I learned the lesson that this kind of steep movement is always followed by a drop. So SMCI had a huge run up. It was not a single candle, but then it's been steadily giving up all those gains. So I think that, you have to be very careful with GV. I think those who have to make money have already made money. And I think when the market opens, the sellout will start. All these guys who had it from before are going to just pile on to sell it to get the profits. That's what I am thinking. The stock I went to HK for last year was 00981 HKEX. SMCI. Check it out. SMIC. Okay. SMIC. Let me see. SMIC. Swiss Market Index Total Return. Wow. Look at that. Sandeep, did you know about this at all? I never thought about this. Oh my God, it's been doing extremely well. It's been doing extremely well. It's overbought and it's moderating. It's coming back down again. It's a safe zone out there. I can't speak on its directions, but I can definitely say that there was a gap up which is probably attracting it back. So the retracement could come all the way back to do the gap fill out here. That's what I'm thinking. Thanks, Hot Dog, and thanks, Inf. And also Max, thank you so much for all these new tickers that you have exposed me to. It's really good. Now, I don't have access to Hong Kong and China markets, so obviously you guys are from Australia or somewhere in Indonesia or some area like that where you have access. I do not have, and maybe I'll have to explore if I can get into the Chinese market other than ETF. I have exposure to Indian markets. I can trade directly out there. And right now that market is at super discount and still PE is very expensive for most of the stocks that I'm seeing, which are really good ones. So I'm waiting for it to fall down further before I put some more money. Exactly. There's a lot of deals to be had outside of the United States right now. And with this tariff uncertainties, those things become really juicy. You had to go to Hong Kong to get a broker for mainland China. And if you're based in Australia, do you think you have to do stuff with the Australian government in order to comply with the AML laws and everything? Because if you go to Hong Kong and other things for deals, then you're under the scanner, aren't you? I think Australia is very strict about it, and so is Canada, of course. Thanks, Max. Thanks for the appreciation. I appreciate you guys as well for trooping in on the morning. And this has given me a lot of ideas today. So I'm going to save these stickers and I'm going to check it out. Good for you, Hot Dog. And Max, just be careful with the Chinese market. And some of the tickers, I think the JD one, I would think that I wouldn't hold it for long term. I would just take the profits and come out and re-enter it. Always keep an eye on it so that you get those opportunities to use the spike trades to make money. So you have given me a lot of hope and optimism this morning, my friends. For the first time in the last 3 years that I have been running this channel, I feel that my objective is coming true. Getting a real retail investor community together, people who are knowledgeable at the same time, humble enough to know that they need to hear other opinions. So thanks for sharing your intelligence and ideas, and it's going to help me today. I'll let you know tomorrow if I used any of these stickers and how I'm doing with it. And thanks In for supporting the channel from day one and everything. And thanks Hot Dog. And I think with this, Max, I'm going to say bye for the day. Happy hunting, guys. Enjoy everything you can in the market. Make a lot of money. Good luck. See you. Have a nice day.